All right, I'm gonna try this again. Just kind of break down what happened over the last couple of days and give some expectations going into next week. Um, One thing that threw me off was the market hours. I didn't trade any of this. Um, I did try to short this 4 hour one more time. See, computer's lagging pretty bad, so you got to bear with me. But um, I did try to short it one more time. You see, I got in here. We got this move beneath here, and it was like 2 in the morning. So I set my limit here, and I put my stop about I think it was like 40 handles away. And I was just thinking that we could finally get that drop off, but it didn't happen. I woke up and we were just barely floating any profit. As you can see, we consolidated this whole time. And it's not like I was expecting a super big move. I mean, during the holidays, you typically get like nothing because the market closed early on Thanksgiving. It closed at like 1. So um yeah, so it closed at 1 and opened back up at 6. But then it closed again at like 9:44. I don't know what that was about. All right, and then we opened up at 8:30, and then we closed today at 1:14. So it was just like, yeah, 1:14 we closed. So hey, but either way, even inside of this range, if we're reading this volume here, it'll give us a good gauge on how price is supposed to react to our levels. So we start off with this PVC. This opens up at 8:30, and we visit the previous day high, and we get this big wick from the top. But it's a top tail. We got this wick from the bottom. I mean, it's an awkward candle, so just say this is a doji, and it gives us our range, especially when you look at all of the volume here, and then we fell off dramatically, the volume. So the first time we visit the low, we get the rejection. First time we visit the high, we get the rejection. All right, we get some volume coming to the market around market open, 9:30. Right here at the high, we get this ABC. So when the market came here, we got a new PVC right here. Bullish, strong bullish candle bouncing off the low. Right, this is our new PVC. This carried us into the high. We get this rejection at the high, but look at the volume on this candle. Now this is the PVC, and it's coming at the top of the swing, so that makes it the EBC. Right after this candle forms, we get the engulf. We get a bearish engulf. So when you get your EBC, you want to see consolidation and continuation, or immediate reversal, or consolidation and then reversal. But you want to see a pause in the delivery nonetheless. So one of those three things, which you're most likely to see. Sometimes this will print, and then you'll get even further distribution a little bit more. But pause and delivery is coming soon after you see um, your EBC print. And this volume is going from low to high. So we get the reversal. Because we got this reversal, then we expect for this low to cause a rejection and a push lower the first time we visit it. So we come here, we get this rejection, boom, then we come back again, we get this rejection again. Notice where this rejection takes us. It stops here. Now this is my IBC. All right. And it's like a halfie, but it's got a tail here, and it's coming at the liquidity. And then we got bullish price action following it. So this is a bullish IBC. We get this strong move above it, little gap here. We come back, we tap off the high, and we push lower. All right, we barely miss the high, but we reject and we get this consolidation. Then we tap the high again, and we push higher again. Then when we reject off the low of this EBC, we fail to take this low. All right. So when we close back above it, then we want to see this high get took. And we fail to take the high here. But because we close back inside of this candle, we want to see the rejection come from the low. And that's what we get right here. Rejection from the low. And this rejection takes us into the highs. So then we consolidate at the high, and we get our reversal back into the candle. Now, when price closes back beneath our EBC, we want to see it take these lows, right? Or it's not that we want to see it, but we want to look for it, right? Because if we fail to take these lows and we close back into this candle without taking these lows, then the expectation is we're going to want to run higher, right? We're definitely going to want to run these highs. And this is what we get. So we close back into it, and then we reference the low again here. All right, we push up a little bit higher, and then we come in the first close that we get back beneath this level, immediately price engulfs, and that's exactly what you want to see. You don't once it fails to take this low, and then it closes back into our significant level. This is our EBC, closes back inside this candle. We want to see these highs now. So whenever we go beneath this level, we don't want to see price spend too much time here. So literally within the first 1 to 2 candles, it doesn't matter if it's the 1 minute, the 5 minute. If this was a setup on the 15 minute, then you would want to see the same thing. Within the next 30 minutes, you would want to see price engulf back into this level of price. So here we're on the 1 minute. So within the next 2 to 3 minutes, we want to see price climb back into this level of price. And it did. First close beneath, we get the engulf back into this level, and then we start to target these highs, and we effectively take these highs. All right. Once we take these highs, then we come back again, and we're referencing our low here. All right. And notice we get this little close here. Let me zoom in. Little close into the price here. I'll be forgetting to do this. Just go full screen and get them tabs off the top. But either way, we get this close here, and what happens immediately after? We get this engulf in action. All right, this candle that closed into it was engulfed within the next couple minutes, and also we failed. We even failed to take this low. So super bullish signal, right? Because we didn't even take this low. We could have took this low and kept this other one intact, but we failed to take this low. So then we get another run back, and then look, this candle right here, right? We get all this volume on this candle, and notice volume goes from low to high, right? So we get this strong candle, and it closes above the high of our EVC, right? This purple line is 421. That's the high here, right? We close above the high, and then look what the next candle does. We reference the high, all right? And now when I mention price going from low to high, I say that because technically, right, this is our swing low. This would be like swing high, so that would make this a EVC. Technically, right? Notice delivery stopped for a moment. So it still upheld the laws that we expect to see play out. All right. So EVC resulted this in this short consolidation here. All right. You see, we rejected off of this high one. We rejected off of it 2 times. But we got this 1, 2, 3, 4 minutes of sideways price action before we continued this delivery here. Right? And it wasn't until we got this EVC coming at the high that we got a strong consolidation. All right, this is a strong consolidation right here for the 1 minute, mind you. It's only the 1 minute, so these are like, it's not taking that long. All right, but when you look at just the actual price action, the candle pattern, it's like, yeah, okay, we paused here, we delivered again. We got this EVC, we paused here. This is a stronger pause. But yeah, so even in like these weird holiday markets and ranging markets, you still see these levels respect volume, and volume is giving you a very good indication of, it's almost giving you a peek into the future, because you you have a good idea of what's going to happen based on the volume and the way the price reacted to that volume. So when this volume printed, we got an immediate reversal. So the first time we come into this level again, we're going to want to see rejections off the low, and that's what we get, right? The first couple times. And again, if we don't get the rejection and we get the strong close back into it, then we want to see rejections off the low and a push higher instead of the rejections off the low and pushing lower, right? Resistance, it be, instead of this being resistance, when once we close back into it, it becomes support. And we're catching the reason why these levels are important is because you're gonna catch a move off of these levels. You're not just getting in like a random area of price. Like I would consider like the middle of this range, like which mind you, this is technically like it's almost like the middle of the range, right? As far as this yellow area is concerned. But when you look at like this move here, get rid of some of these. Right, so it's like price takes this high, right? Now, this was our EVC, our bearish EVC before we got our bullish IVC. So you might say like, oh, well, maybe if I short the high right here or something, you say that this has more volume than this, right? So you can say something like, oh, well, if I short the high, it's not totally random, and it's not totally random, but it's not where you want to get into your trade, right? So like if I'm short, I'm gonna expect that price is more likely going to want to reference my EVC than it is, my bullish EVC on the run back up than it is the bearish EVC on the way back down. So what I'm trying to say is, if I'm short, do I want to be short here or do I want to give price a chance to tap me in here at the very high? Because I know once price hits this level, then I'll actually have a good understanding of what price actually wants to do. And here you can get in at 387. What's the high here? Yeah, 386. And yeah, you catch a move here. If you're short here from 386, you catch this wick, I don't know. Me personally, I'm targeting the low, and this doesn't really give you that much time to get out. So, I don't know if this looks like if I was to get in short right here, this might end up being like a break-even trade for me. Because I wouldn't have liked this if I was in a trade, especially the volume that came in on this candle and then it's rejecting off of my bullish IVC here, right? And that's the thing too. It's like we got a bullish IVC on the chart, so I don't necessarily want to be shorting. I want to get a long entry at my IVC because I'm more likely to catch my move here if price is actually gonna go with the volume, right? But if I want to be a rebel and I'm looking to short, why would I short here when I've got another good short entry right here at this bullish IVC where this reversal happened? Give yourself 10 more handles, right? Because again, you're going to know right away, if you're right or wrong about it, majority of the time, because you're either going to get this rejection here at this level, or price is going to close into it. And then shortly after we close into it, either we're going to be rejecting from the low and pushing higher, or we're going to be engulfing right after we close into it. Kind of like this here. The second circle. See, we get this close into it, just barely. And then what happens? We get this wick and we engulf. And we engulf with volume. And this takes us nearly back to our IVC. We pretty much just failed to take out this low. Right? But that's exactly what you're going to want to see when price closes into this level. You're going to want to see an engulf happen like right away. Now again, with this range, we got the most volume being bullish coming in at the bottom. So I want to kind of position myself to get long somewhere here. But if you're just trying to catch a scalp, catch a move, yeah, sure. You could catch shorts here, you know? But again, if you're trading with the volume, then you're more likely to get the entry that you want, right? And not really too much worry about, because the thing is this, we got this bullish volume down here. Notice how these lows keep failing to take, we keep failing to take the low. So it's like if I'm short here, right, like we form this EVC, and if I get short right here and price starts running back low, I'm gonna at least want to see price run these lows. That's what I'm gonna want to see. All right. Now this from 96 to 53, that's like 40 handles. So, and again, if we're in a range of markets, you want to maybe get a 1-to-1. Me personally, I like to do 40 handles of risk, and my target to be 40 handles away, 1-to-1. So if I'm short here and I get a 1-to-1, yeah, that's possible, but it's much more risky. The safer play is to just get long with the volume at the bottom of the range, as opposed to getting short against the volume and trying to catch this. It's like you don't gotta catch this when you could get long here and have no drawdown. This is like a no drawdown entry, and we run from 353 and we run it for the rest of the day. And you can read the chart because you know how to read volume, right? And wait until we get an EVC to actually get out the trade. You could target these highs, right? You see we take these highs and maybe you take some profits here. Then we run in here again, you get another EVC on this run down right here. EVC reversal follows shortly after, right? We just reference the previous day high again here. We get this closing to the previous day high. Boom, we go off immediately after, right? Get the strong close back into our EVC, bullish EVC. We reference the low and we start seeing these indications that no, prices we're still going to keep carrying up. That you see once you're still in the trade, right? Or you could just grab your 1-to-1. You could do however you want to play it, but you're going to be much safer if you just try to trade with the trend, with the dominant PVC. And in this case, our dominant PVC is this bullish IBC right here with this bottom tail. So I think that's going to be it for this one. I don't really have too much. I think I pointed out everything that I needed to get across. And honestly, with these PVC, it's the same thing over and over and over. So every time I open up this video, I'm going to point out the same things that I see every time that I look at the chart. Because it doesn't matter. I literally see the same thing. Range in market, trend in market, accumulation, distribution, manipulation. I see the same thing over and over. So, there's like little details, little nuances that, I may see in like certain setups, or certain market conditions that I'll be able to point out. But for the most part, it's literally like this literally like the same expectations, with the way prices reacting to the high and the low of your PVC, right? So long as you can pull up your chart and look at the volume at the bottom of the screen and be able to identify like where's the most volume within the range, right? So when we come here and we form this EVC, you can literally just look at the bottom of the screen. You can see, well, this is the most volume we got from this low to this high. This is the most volume. Let me mark the low and mark the high. And then when price runs beneath and you say, okay, we got even more volume now, but after this candle printed, we got this bullish engulf. Then price ran and we rejected off the high and we pushed up even higher. But where did we reject? We rejected at the low of our bullish EVC, right? So damn, okay, so now that we're running back low from the bullish EVC, I think I want to get long because my dominant volume on the chart is bullish and we're in a ranging market. So we should reject at the low again and push up higher. It just makes sense. And that's exactly what we get here. Bullish IVC. Price comes, we get our first tap here. We run into the low of the bullish EVC. And that carries us back into our bullish IVC. Right here we actually tap. Let me get rid of this one because we didn't tap right here. Right here we actually tap. And immediately we ran into profit. If we're long right here, we get into profit immediately. So quick breakdown. Oh yeah, next week. I don't want to stop it just quite yet. So let me take a look at the weekly. Let me get rid of these executions because it's gonna make me look crazy. Excuse me. All right. So you see, even on the weekly, we got the same action happening right now, right? Disregard all of these purple lines. I mean, obviously we got PVCs from before the PVCs I even just marked up, but we got an EBC on the weekly. You see, for the last 3 weeks, we've been printing bearish candles. And then on this one, we got the most volume. And then last week, what happened? We got a bullish engulf, right? So it's the same even on the weekly. Now that we close back above this, when we open up next week, the question is, are we going to want to bounce off the high and push higher? Or are we going to engulf back beneath and try to push back lower? When you look at the daily is saying that we have just a healthy, strong, bullish run. We already got our close above this EBC right here. All right, we got the close above it right here, but we haven't actually came back and tapped into it. So I do want to see a retrace, a bearish retrace, but I don't want to see it go too deep. I'm liking this high or this low, especially because we gap down here. I could see price wanting to retrace and reject from this low and push back up higher. So we shall see. But in the immediate, I'm not really seeing anything that's telling me that price is just like tank back below, minus this the volume on this 4-hour PVC. Because we got this pretty strong move above it here. We're almost 200 handles above this 4-hour PVC. And when we closed above it here, we never actually referenced it. So I do expect for this to get referenced next week. So I do want to see a pullback into this level. And I want to see price reject off the high, this 4-hour PVC right here, and give us another bounce. And then we'll start to measure the strength of this run. See if we start to weaken, because what will happen is price will come back here and it'll bounce off of this 4, and we're going to be looking for it to take whatever high is formed before that happens. If we fail to take that high and then we start closing back into it again, then we can expect for bears to start making a run on this liquidity here and possibly even try to drop back lower. So we'll just play it day by day. We'll see what happens, and we'll go from there.